what did you make of the Fed and the things it said about the balance sheet? Some people said it was in tone generally more hawkish and that they sort of ran the numbers on the balance sheet after the event and realised that actually this was going to be quite speedy at reducing the balance sheet in the short term. Would that surprise you, or did you have a different assessment?
Well, I think what they're doing is what I expected them to do on the balance sheet, which is allow it to run off without aggressively selling bonds. And I don't think, therefore, if they carry on this track, that the runoff of the balance sheet is a very big destabiliser for the US bond market or for interest rates. I think the Fed were right to put 25 basis points on the Fed funds rate, not because of inflation. There isn't inflation in the US, and it's probably not coming. Technology and demographics are very deflationary forces. So I don't think inflation is the reason to raise rates. But even with very low inflation, the beginnings of wage growth, the beginnings of capacity constraints in the economy, the US economy will be healthier with a modest positive cost of short-term capital. I think it's as simple as that. And I think, therefore, that you probably will see another 25 basis point increase later this year. You're on a track which leads to a flatter yield curve. I don't think the 10-year has to move very much in those circumstances.
OK.
Jim, does a hawkish Fed kind of drive investors to action? I mean, you want to take advantage of low rates before they get higher?
It would tend to make borrowers want to move quicker. But, you know, having said that, a lot of borrowing is floating rate. A lot of it is linked to the 10-year. You know, the 10-year bond is really what drives the US mortgage rate. And so I don't think that's changing anytime soon. So, yeah, at the margin, that's probably true. I do think, though, a bigger impact of this is that slightly higher US short-term rates at a time when there's not much tightening in monetary policy elsewhere will tend to lead to the US remaining a favoured destination for international capital investment. So expect the US to continue sucking in some capital and can expect the dollar to stay with a fairly solid to strong tone.